In case you missed it, I'm going to give you exactly where you need to be focusing your time, effort, and energy this week with your trading. There is one thing that's going to be on the top of everybody's mind, and we'll break that down right here, right now. Looking at this article, we can see the U.S. downgrade and credit worthiness essentially. Last time was in 2023. Now, this is important to know. It seems to be a growing tension between the political parties as well as the efficacy and sustainability of these tax cuts that have been proposed. Now, what we need to know is essentially if markets are going to respond to this, we need to be essentially looking at where they will show their sign. Now, looking at TradingView, we can see some early indications of where this might be the case, looking at different bond yields. And essentially, you're going to want to be considering how are the further dated yields looking. If something in the future is going to be dated with, steeper pricing to the downside, something like, looking at like the 10-year, right? If the 10-year right here is going to be trading lower, it's essentially suggesting that in the long term, there is going to be a decline in economic feasibility. The reason is that creditworthiness and all of that with the US really impacts banks' bottom line. When the yields are down and they're falling in the long term, that means that there's essentially going to be a anticipated recession of sorts. Now, this is not to be a major concern. It's just something simply to be aware of, because news can be perceived in two ways. It could either affirm the headline or it can fade the headline. Now, there's a few other markets that we need to consider as well. I am personally an index trader, but we will be going over equities markets as well as some commodities because this stuff's all intertwined. Now, one of the biggest trades of the year has simply been the gold rally, the flight to safety. A lot of traders have rotated out of equity markets into gold and other commodities just based on the fact that this has been seen as a safe haven for just capital. If you're managing billions of dollars, where are you going to put it? You're going to put it somewhere where it's going to be heavily influenced by tariffs or something that's been tried and true. Now, that's what we've seen. However, with this recent action, we can see somewhat of a double top forming on these gold contracts right here. Now, we've also seen some decent downside movement. There's been a lot of good short opportunities in here. The question is whether or not we're going to start to target lower. I do believe that if the market continues to climb, the index market, of course, that gold will start to recede as well. And with that in mind, we want to also consider that is gold going to actually instead maintain its current ground based on this new development with the credit worthiness of the US? The question is that. So we have to consider whether or not this is going to start to see some upside movement or continue with that downside move we have in mind. I would be watching some key levels right here, specifically 3,300, 3,100. This will give us an early indication of whether or not we're going to resume and hold this box as commodities often do, or if we're going to see a bit more mean reversion. Now, the reason why I say that is because if we look at something like the daily SMAs, we can see that gold is quite extended since essentially last year, quite extended from any of the longer term moving averages, like the 100 or 200 day moving average. When that happens, it just shows you this is a strong trend. Now, historically, has that always been the case? No, gold, from when I started trading to, through Biden, essentially, through end of COVID, through Biden, it's just been a range. It's been a huge consolidation. This is typically what currency or commodity markets tend to do. Now, these daily moving averages, you see they're very overlap, very messy. And then into recent time, we've seen this meme coin development. Is that something sustainable? Who knows? But the question is whether or not this starts to pull back. Will we see the opposite continue to happen with the equity markets or the index markets as well? With the indexes, they tend to move opposite of something like gold, because gold is essentially a hedge against inflation, whereas equities and index markets, they tend to benefit from inflated prices. So looking at that, we're going to also compare something like crude. We've seen crude has been, again, somewhat like we just described. These commodity markets tend to range for extended periods of time. People tend to agree on the prices of these things until there's some sort of macro development. And the question is whether or not we can start to see essentially crude start to make a move either higher or lower. We do know that there's talks about production increases and things of that nature, which would in turn affect the crude prices. However, nothing's set in stone with that. What we need to pay attention to, again, right here, will be just looking at further downside movement or further upside movement. This can help us gauge whether or not there's shifts in the other markets outside of what we trade. We always want to have our eye on things that are related to what we do. Now, looking at our main bread and butter, what we trade, ES and Q, and what we've called pretty accurately since the lows, we called this as the low, and we said we were going to go higher this week. And we've seen just that. We saw the inside day break. If you watched the video from earlier this week, we talked about this inside day break before it happened, gave you the upside levels, and we essentially crushed that on both ES right here as well as NQ right here. We hit up to these levels. You can go back, check it out for yourself. I posted all of this stuff just the other day. I believe it was Sunday or Saturday, one of those days, but we can see that we had that upside movement. Now we had this gap up, which broke out of the inside day and gave us this continuation right here. This has been a relatively clean move. Through CPI, there was a move. You're able to essentially, number one, this overnight move, which I was trying to catch, got trailed essentially like an hour before. Unfortunately, it was a little too tight, but we were looking at this gap for the gap and go, and then this overnight move. Beautiful execution. This is news right here. I could have personally just been positioned a little better. I would have been better just leaving a fixed risk and letting it run. And then over here into this section, yes, we get the nice move up again, as well as this right here through CPI. A lot of good trade opportunities. You could have got long in here with the fixed risk stop down there and held it through CPI. The reason why I believe this was a trade you could hold through CPI was simply based on the fact that this year we've seen CPI and NFP numerous times not respected in the sense that they're high impact, meaning they don't wick aggressively in one way or the other. Now, this isn't something that applies to every CPI or every NFP, but contextually, you had a pretty safe entry right here so that you can hold through this trade. We saw the same thing on NFP just a couple days ago, if you want to check that out as well. But yeah, looking at this, we saw some more range bound action into here. We had a nice short opportunity into London down to here. This was a trade that we just recently discussed, able to give you 3 standard deviations. If you go to check it out, boom, right on the money into the daily fair value gap. And then you get this squeeze right here yesterday. Long opening range break for this relatively equal highs. It does not get cleaner than this when you're talking about a target, right? And then you get the rollover from pure exhaustion. Now, a lot of good opportunities this week. You can see that there were some range bound opportunities there. You had the sell off down to essentially these equal lows. And from there, you can start to realize that we've been working inside a range. This is a range. We will continue to work inside this range. What I want you guys to pay attention to this week is one simple thing when you're looking at the index. I want you to monitor whether or not we are trending or in a range, because as you can see, the entries that work here are not going to work as well here because you have higher lows that form in a trend, and then you have consolidations and failed breaks that form in a range. So you have to change the way that you engage the market. If you're trading in a range, you're better off fading the extremes. You see 2 opportunities right there when you go ahead and take a look at either under old lows, something like that, right? Or above old highs, something like that. So when you fade the extremes, you have more opportunity to catch a reversion trade. Now, how do you know what extremes to fade? Look for ones that look exaggerated. That's typically going to be a really good short entry. Something like this, it gave you a nice signal candle at the highs. You can see right here, the little pin bar. You can structure your short. I actually was involved in this trade a little bit. I do remember over right here. You can see there's just some really clean downside delivery. You have relatively equal lows right here. So you have this whole market maker sell model. A lot of long opportunities. You see the multiple change in states. You can see it kind of flip. So you get an entry right here, target lower. Easy money. It does not get easier than that when it comes to technical intraday trades. But you can see that based on the change in character with how the market has been performing, going from this trend to sideways, the question remains whether or not we resolve higher or lower, much like any other market in this current period of time. Now, what I want us to be primarily focused on is the fact that we have seen quite an extended move, right? This is a big, strong move off of the lows that we called down here, essentially down here under these swing lows. We talked about this monthly order block right here. We talked about these relatively equal lows, and we've seen exactly what we wanted to. We expect, again, I said it last video, I expect all-time highs by June. Very, very, very clearly to me, this was the bottom. There's not really much debate there. The way the monthly candle formed, beautiful delivery. Now, I do expect these equal highs to get ran. So I'll make it really clear. This is going to be, I'll put it just in simple words right here. June target. relatively equal highs. That's what I'm thinking at some point. However, we do have some work to put in before we get to that level. Now, this is where I want you guys to kind of pay attention a little more. We're essentially interacting with this weekly fair value gap. Now, the question is, do we reject here? I don't think we necessarily need to run the lows down to 20,000. I think above 20,000 is pretty safe. I think we're staying above there, but I do believe that at least 50% of the prior week range is completely in play. So mark this out for you guys. These are the exact levels that I would be focused on engaging with. I do expect 50% of the prior week candle to be engaged, as well as I do expect this gap down here to hold as an inversion fair value gap. By the way, if these videos help you out, if you made money last week using my levels, leave a like, but let's continue. Looking at this inversion right here, I would call this my line in the sand, my LIS. I don't expect it to go below there. Can it? Sure. I could be wrong. That's perfectly fine. However, I do want to see primarily us hold the upper portion of that 50%, as well as potentially to the equilibrium of that daily candle. Now, we can trade up to here, but I do believe the sequence will go inside bar, maybe a sweep of the prior week low on the following week after, and then rally to the all-time highs. I do believe we form a fair value gap right here. That would be my assumption. Now, again, you got to bear with me a little bit. I do personally believe that this will form some sort of fair value gap. It's not there. Obviously, these aren't candles. There's nothing there. But I do believe the way that this next week forms will follow this type of order flow. Now, you can see that this bottom section, I expect to be left unfilled. So if this next week is going to be an inside week, what does that tell me about my trading protocol? Well, I want to keep my expectations within this range. Now, do we gap down? Maybe, sure. Maybe we trade into here. Maybe this gap ends up smaller. But my assumption is that we will form some sort of fair value gap down here. So with that in mind, I do expect this week to be contained, and I do expect there to be some sort of limit. So what I'm going to do is avoid breakout trades that are super aggressive against one edge. I'll look to fade the range because I expect a narrow candle. Expand, consolidate, expand, or expand, consolidate, reverse. Those are the options. So again, I expect us to stay within here, essentially 21,000. Yeah, 21,000. 21,000 to 21,500. So I expect maybe a 500 point range on the week, which would be nice. We do want to continue to see falling ATRs. If we go ahead and look at our ATR right here. Yeah, ATR is starting to stall out right here. So it'd be nice to see this kind of return to the more normal level. We're still extended. So if we put in a 500 point range, that would essentially be half, which would drop this a little bit, which makes more sense to me. Now, that's what I'm thinking for NQ. It's going to be very much the same on ES. If we go ahead, delete all the levels, go ahead, get rid of bar replay. So there you go. NQ levels, ES levels, very much the same. I'm going to be essentially wanting to see, number one, that right there hold, this level, this little up candle. Want to see that hold, as well as this inversion right here we're already at. ES is clearly the stronger, and it has been for quite some time. We've seen a reluctance for high beta tech names to kind of move, and NQ has kind of just been putting along. It's been doing its thing, but it could be stronger. YM's leading the way by far. Looking at this right here, you see ES, again, same levels. Looking at this inversion right here to hold, make this a different color. There you go. I want to see this hold up to essentially 58, 56. So 58, about 150 point range. Again, that would be below the ATR for that recent time, be closer to the average ATR. So I do think volatility starts to compress right here for us then to expand while we start to see, new highs. That's what I'm thinking by June. I think summer rally is very much in play, very much a real opportunity. So these are my levels for ES, looking at the weekly range, stay within there, target all-time highs right here. Make this again, black line, make this your June target. There you go. Very much the same thing. So looking at the daily chart, you can see the daily charts. It's a very extended, very thinning out rally. The volume this week or volatility has been very, very, very thin, very choppy, very much a range. But it's good to fade the extremes of the range. You're up above short, up above short. Now you can expect some down below longs. That's the type of trading you want to be participating in when you're in a range. Otherwise, you're going to get chopped up. You get faked out every single way. And then you're going to end up why you're so frustrated because you brought the wrong playbook. And now that's an important note that I need you guys to keep in mind. Right playbook, right time. That's how you succeed at trading. Going on to some of the other markets, we're done with futures. I'm going to share with you some stocks that I either like or that have some sort of technical catalyst or something that we've already been watching. Hood, very, very, very clean performance since we first talked about it in early March, April time around here. Extended rally. I think our entry is somewhere in this range, this 47 area. Palantir, again, same type of thesis, rallying. Technical chart levels looked very clean to me. And essentially what we had was, technical chart levels and then thematic ideas where you're looking at Palantir as an AI tech kind of defense name. Hood is essentially going to be bullish on equities as a whole because it's essentially how most people are going to trade. And they also have some decentralized finance aspects to what they do. That's the thesis there. Home Depot earnings coming up. This could be a big name to kind of watch. It's a bigger market cap stock. Apple, again, going to be very close to what the market's doing. It's underperforming relative to some of the other names that are very close to it, such as Microsoft. Microsoft's been leading the way. Other names with earnings on the way, Billy, just garbage stock in general. Tesla, on the other hand, has started to make that upside move that we talked about, this base breakout. Very clean move here on Tesla. We're talking, was this 30%? Very, very nice move. Amazon as well, gapping up, higher low, looking to potentially continue that trend. I also like using 24-hour charts for stocks so they look more like futures. Clean those up right there. Boom, 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 boom. Very nice selection. And then going on to one of the names that I'll be watching to this upcoming week is going to be United Healthcare, UNH. Big potential exhaustion kind of gap play right here. We see the stock is down tremendously from all-time highs. We're talking 60%. So honestly, any sort of recovery is just free money at this point because you're buying down here, you target even up here. But the question is whether or not we start to see it return to more of what it's used to, right? It's got a lot of price history in this area about 480s for it to then reverse. Now, why is this stock selling off so much? I'm glad you asked. There's been a lot of negative news catalysts. You had a Department of Justice probe. You had obviously one of this lead executives stepping down, another one being removed from office, so to speak. And it's just been a beat up name. So the question is whether or not something like this goes out of business in the next couple of weeks, or if it simply returns higher. That's kind of the question you'd be looking at. You always want to buy panic when it makes sense, and you also want to sell the news. Now, in a story like this, where selling the news would be essentially buying the stock because everyone's saying, oh, it's such a bad idea. It's terrible. It's bad. It's bad. Okay, that's opportunity. You're telling all the common folk to get out of it. When you look at something like this, you should start to see, is this an exhaustion gap? Is this potentially setting up for the right side of the V? Are we going to see a return back towards that 500, that average, that volume guarantee? There's going to be, your volume, start to look at it on a long enough time frame. Yeah, something up here. This is more within the means. There's your value area. So if we can start to magnet towards that, that's a lot of free money because big firms are going to see this as undervalued and fair values up there. Now, with all of these stocks in mind, there's going to be a few key principles that you want to keep your eye on this week. Obviously, it's going to be a thinner week when you look at the overall economic calendar. You can see that unemployment claims are going to be Thursday, but we have an open, fresh, naked layout this week. Now, we don't have a lot of chart structure to work with on the short term. So when you come into this week, you need to start the week a little bit slower. If there's no news, that means Sunday's open is probably going to be very, very, very mild. That being said, it's different than last week. Last week, we were ready to rock and roll at the open because we had that tariff news. Not every week's the same. Not every opportunity offers the same risk reward, and not everything is worth your time. Those are the things that I want you to keep in mind as I remind myself. Looking at this right here, it tells me that we're going to start off slow. We're going to pace ourselves through the week, and we're ultimately going to only take the best opportunities. There's going to be opportunities elsewhere, but maybe not in your specific market. You just have to keep an eye on what's going on. Watch as the news develops. As you've seen all year long, this is a heavy news market. Now, what will I be trading? Specifically, I'm going to be looking at grabbing equities like I described. I will also be trading on my Top 1 Futures accounts. If you're not familiar with Top 1 Futures, I have a link in the description, 40% off any account. This is the best firm by far, easiest, simple to understand. Here's all your rules listed straight out in the open. I get instant funded accounts. That's what I trade. And you can copy trade up to 3 of them. It's worth your time to check out prop firms if you have not already. When it comes to my equity trading, that's all personal cash. But when it comes to my futures trading, I'm going to leverage the opportunity here and avoid needing to tie up all of that margin. But now let's get back on topic. So you got to understand the key principles for what's going to move the market this week is really going to be related to all of this macro stuff. We're in a macro-driven environment. It wasn't the case a couple years ago. With Biden, it was not the case. A lot of executives, a lot of world leaders, they did not want to deal with Biden. That's what they say themselves. But now we're in a market where there's a lot of things that change really quickly. Headlines go out. Headlines are fake. Biggest reversals in history happen. We need to be on our toes. But that doesn't mean we need to be pulling the trigger all the time. We just need to be ready. Show up to the game early, stretch, get your work in. And when it's time for you to take a shot, you pull the trigger. And until then, just stay patient, guys. If you enjoy this type of content, please leave a like, share, subscribe, and tell me what tickers you're looking at this week. Is there any names, any darling stocks that you have in mind? Tell me down below. Till next time, take care and trade safe.